right, folks. We are looking at the NQ chart on the Renko. This is the algo that I use to determine timing and entry price as well as trade management. It is Wednesday, September 21st, Fed Day. FOMC presser, I believe, is going on right now. I'm not listening to it because I'm done trading for the day. Let me turn on my music here. I'm done trading for the day, so I'm not even really listening to it. I'm just interested in watching to see how the algo is going to handle faster price movement. When over the summers, especially last summer was the first time, like when I was first introduced to the algo, and it was using the simpler one, which honestly we might prefer to watch now when it's this fast. But when I started learning this system in the summer, at first I was like, oh, it's so much to learn, and why do I need to know what all these mean? And the truth is that I probably didn't need it to trade ES in the summer last summer because things were so slow. But as soon as price movement increased, like the range increased and the speed increased, and then eventually when I went to NQ, pretty much any time, but even with ES, once things really started to move, I was dependent on making sure that I'm only taking like the signals that the algo tells me to, and not just buying and selling based on my chart. Like location was not good enough with this speed, because you can imagine, let's say, like for instance, I've got a level here at 11,935, right? So if we put a line at 11,935, and I tried to approach this from the standpoint of I know I want to be bullish, and I want to be bullish at 11,935. Well, when do you buy it, right? Without the algo, like, you want 11,935, so do you buy it here? Well, no, because it's just like falling through. Okay, so you buy it here. Well, then you're going to get stopped out here if you want to have a 15-point risk, right? So do you get back in here like automatically, or not? And then when that gets stopped out here, do you get back in here, right? Without the algo, there was no way I would catch any of this, especially when it's fast. Like I said, I'm not currently trading just because I hit my goal for the day. I'll show you my results if you want. But the algo tells me basically what to look for and when to actually take that trade. So for instance, here, this one is not a long. The triangle by itself is not enough for a long. This one here may be a long, depending on. Actually, it usually is because it's got a purple bar before it. But we could also double check and see where the volume is. Yeah, volume's underneath. So you could take this long with the system. But if you did, you must take this one that turns out to have a blue. You must take this, because when price goes just a few ticks underneath and comes back, especially when it can do so without much aggression, which is what the pink bars are. It's just like price rising, but like basically just because people are pulling their orders. When that's happening, you have to get back in, basically. You have to, even if you did everything right on your getting stopped or whatever, you have to get right back in. And so, is it 100% accurate? No, but there's no way I would know to ignore the first entry and follow through on the third entry. No way, without the algo. So that's the important thing to keep in mind. So yeah, this is the one I learned on, and the one that the room trades, which is what Simon recommends and what everybody should learn first if you're in the room. But then I've been trading with the room for a year and have developed my own ideas and like different color schemes and stuff like that, and have added additional signals that are intended to help me stay out of sticky situations. So, for instance, when it's pink back here, this and this and this, it says I cannot short even if I get a signal. It basically says all the momentum is going to the upside and there's no reason to fight this. So that's just an example of one of my own signals. But you can see that the lines on Simon's are thick so that you don't miss them, right? But on mine, I've got them quite a bit thinner and colored differently. And then the other thing that's really different about mine is I have these lines here that extend out of the pivots, what are called power bars. I use a sideways purple triangle. And that tells me when we've trapped. So like up here, that price point at some earlier time had a pivot. So if we get up there and test above it and then trade lower, like I know that that's probably my highest odds sell in that area. But if I didn't have those lines, I would have to scroll all the way back just to find that and then add the line. But I can just see right now, even though it's going fast, I can easily see that the target, where all the liquidity is up here near this voodoo range level because of these red lines. Liquidity generally sits on top of them. So do I want to be shorting here? Well, only if I just want 10 points, right? If I'm thinking that this is the end of the move, I'm looking for capitulation and the indicators, really what I want that to happen up here. It doesn't mean it will, but when it just kind of like slows down here, I'm not going to short it, even though I might miss the move, knowing that there's all this liquidity up here. We don't have to break every single one of them, but we should at least approach them. These guys, the ones that have been there for like the whole session, we should at least approach them. They were there from overnight on Monday. They're Monday overnight highs, and the highest one up here. And so it makes sense if the market is eventually going to resolve lower, that we would come up and steal some of this liquidity and get tired up here before rolling over. It doesn't mean that will happen, but even though there are shorts available here, you can see that like you could get 20 to 30 points on these, like potentially, right? I'm not saying that's wrong, but when I've got, especially once this pink goes away, then it's actually better. But the closer we get to these lines up here, the less comfortable I am aggressively shorting like a lower, or the higher high, right? If you want to short the lower high, I don't think that's so bad, but just realize that it's probably for a scalp unless you've cleaned up all that liquidity. And so far, as far as I can see, there's still liquidity above us. So, I would not just like blindly buy these, and I can't buy them as long as it's purple, right? So if this purple stays there, it's like there's no way you can, but once it disappears, if it closes bullish and it's not purple, well then things change. So now I could technically buy it if I had the signal, and it's just a question of whether or not you think this is momentum or if this is just mean reversion. If this is a location that you like and you think it's mean reversion, you could technically buy that. But you can see here we're having trouble even getting back into this channel, and normally mean reversion, most of the prices the trades occur inside this, and like right now none of the trades are going inside this. So even though this is a rational entry, if you think it's mean reversion, from the looks of the chart, it's not, because we're stuck underneath that channel. And if you're underneath the channel, you're either trading with momentum to the downside, or if you just can't get into the channel, you are in the process of capitulation before the bounce. But you don't, in my opinion, you don't buy one here right next to the channel, because if you think it's capitulation, your target's here. So like right here, if you bought this one, my target is basically just to get back inside of here. And so then I have to ask, do I have risk reward to put my stop down there, buy here, and exit like in this quadrant here? And my answer is probably no. So even though it says it's a valid entry, the conditions aren't right for that type of trade, so I skip it. But you can see that when it's this fast, in my, like, here's another one, right? So like, even though it's so fast, I don't have to watch the footprint and make like sketchy decisions under duress. I can just ask myself, is it a green bar? Is it a star? Does it follow a purple bar? And did it trade below the previous low? All those things are true. This one becomes a much better entry than any of the ones we've seen, right? So I don't mind taking this one. I don't take this one. I don't mind taking this one, but usually I won't be that aggressive. But when we sneak underneath it, and we come right back in with an algo signal, especially on higher volume, you're going to get a scalp out of that, right? It doesn't mean it's going to go back to the highs. It just means you're going to get, that I can probably get 10 to 15 points pretty consistently. Okay, so he's clearly talking now because we're getting like wild swings here. Hold on, let me get rid of some of this. Does not mean it's going to retrace the whole thing though. But those little like explosions of that illiquidity you see is news algos firing off when like he says rate cut or something, you know. So it's if you're going to trade FOMC, in my opinion, the better time to trade it is either right before the presser, like not right when the information comes out, but right before, between the time when you get the first reaction to the information and before the presser, or wait for the presser to like climax, and then you could potentially find a trade. But I'll be completely honest, most of us should not be trading during the presser, and I don't think any of us should be in positions when the actual number comes out. But really, most of us should not be trading this. And like I said, my day was decent, and so I'm definitely not touching it. Like I could trade it in sim if I wanted, but I'm just mentally noting what I would do. But see how now this is changing character. Now we're starting to get flat. The channel is flattened out, and all our bars are one after another going back and forth and back and forth, and yet they're firing. See how we're getting algo signals here? This is just a plane up, and this is just a plane down. This one's got a triangle on it, but that's what a plane down looks like. But you can see when they're colored differently or they have markings, it kind of indicates that there's some aggression there. And so they're fighting over this zone here. And so now that becomes a pivot, and whoever can take it, like support will be underneath it or resistance will be above it. You'll see that in a second. But that's like, even though that's not really an entry signal when everything's so flat, what it does tell you is like, if you can get under there and find buyers, you can probably attack this. And then if you can go higher than that and pull back into the tip like this, pull back into the pivot, now you could buy it like if you think it's bullish, right? Because we've broken over it and we're establishing volume above it. So now any dip into the pivot, here we go. If they dip into the pivot and bounce off that voodoo range level, easy long. Is it easy to execute? No, but technically it makes sense. Let's see if it sets up. Now, if it just falls right through the level, no. But I really am supposed to get a algo signal, like a star or a green bar or a diamond. And I really would, there. So that's the first one. It's really high, though. See how it's way up here? A little tricky, but valid. I would definitely prefer it comes back into the pivot, but this is still valid. You just might have to try it twice. It might stop out and then come right back again, but that is a if you think it's bullish, yeah, like you can, are you going to get 10 points off of this? Most of the time you will break this high and get this, right? But the important thing is to understand once you get this move, you'd have to take some of the risk off, because a lot of the times it's going to come back here, dip, and then bounce again. And so if you're going to take this kind of leverage, like trading futures with the minis, right? Like if I'm taking like 2 mini contracts, my first mini contract is out as soon as we break this high. And I'll hold the other one in case it keeps going, but I'm not going to like balls to the wall, hold my entire sack, like past one of these like breakouts. And I know a lot of people are buying this, and I think that's crazy. I want to be the one who's taking risk off here, even when on the times that it flies higher, because like even when it goes higher, like you don't know which times those are, right? Sometimes it's going to just come right back and hit your stop, and then you actually were right about the direction, but you didn't get paid for it. So I at least want to get my risk off here. But seeing that it does suddenly look a little bit more bullish, it does make sense to hold runners for sure. But just understanding that the times that you get the monster move on like the second, right? Like this one, and then pulls back, and then you get an even bigger one here. Those are actually much more rare than we think. So I would, but when they happen, they make your day, right? So I would prefer to take some off here and then leave my stop down where it was initially and just let it ride until it proves to me that it's not going to be a monster trade, which is generally a more than one voodoo range retracement or a strong high odds sell signal. So like this is a sell signal here, the orange bar, but it's not a high odds sell signal all by itself. It is above the radar, the channel here, the blue line. It is above that, so you're usually going to get extensions, but those extensions usually only go to the center of the radar, and even if they come all the way down here, it can turn into a balance situation. So I'm not. Some people do short every one of these, as long as they're in the right location, and they do okay. But I'm just not that active, and I'm not that aggressive. I would rather let this one go, see how they develop, and then if they like trade above them and then trap back in again, maybe then take the short. But until then, just focus on trying to extend this long. Now, if I would have done that, right, it looks like we have now stopped out this guy. Oh no, was it this one? No, it was this one. It was this one. So it not yet stopped him out. But it looks like we're going to, right? So if you wouldn't have taken profits here, and then extends all the way up, and you don't trailer stop, and it comes back and stops you out, right there, right? Are you gonna like tilt and be upset and not be able to make good decisions? Well, if that's the case, then you can't hold runners. You're sizing too big. Your runners are way too much of your total, right? You need to take like 4 off here and leave 1, and trade like 15 micros or something, you know. So that's really the solution to that, because otherwise the only other thing you can do is take your profit, most of your profit here, and then just target a certain amount of an extension, maybe like that exact same amount, to get that same move again. And then if it does it, and then you see any weakness, right? So any sell signal, even if it's kind of a so-so sell signal, you just get out, right? Because it's already gone to your main target and it's gone further. And so then you just start getting really nimble. But I think what most people do is they don't take profits, they get stopped out, they get upset, they don't re-enter even though they got triggered to re-enter because they get frustrated that they lost the trade and they didn't take profits. And so they're stuck like hitting themselves over the head with a rock about this lack of selling, that like the poor decision there to hold, that they don't even think about the fact that we are right back into that long zone, and now we're coming right into an important level. And so chances are you can get those 10 points here just as easily as you did here. I mean, maybe I'm going a little fast, but that's the way we need to think as scalpers, is that there's no difference between that 10 points or 15 or 20 points and this. It does not matter which one you get. Just know which one happens more often so that you can target that. Because personally, I know it's this one has a better chance. And why? Because it had a pullback into an area that we established that shorts were trapped. So that extension is more likely, as well as this extension, right? Does it sometimes go twice as high? Yeah, right? But more often than that, it actually pulls back and then goes higher. So why not just wait for the pullbacks like this? This was a perfect example of a trap, right? They try to get everybody long, they trap them out, and they come right back again. This is your high odds setup. This one is an aggressive setup. Sometimes it will just go, but most of the time it's actually going to trap back in, and then sometimes it'll just fall, and then you won't get triggered to the trade. Other times you get the signal again, and it's like, okay, this one I have to take. If I took this one, if I was aggressive, I can't skip the high odds one just because I'm like butthurt that I took the aggressive trade. Like if you're doing that, if you're taking the aggressive trade and missing the good one, stop taking the aggressive trade. You think you're an aggressive trader and you're not confident enough yet to be aggressive. So take the conservative trade until you learn that this works so often that maybe I can take a couple of the aggressive ones too. right? But the, you have to know the edge of your system, and the edge of Simon's system is mean reversion. So it's not momentum, right? Yes, you can catch some momentum trades, but these kind of plays where they try to go, they try to go lower, and then they look like they're going to bounce. Everyone tries to buy it, and they actually trap back into it. This is the one. If you buy this here, you actually not only get the mean reversion trade, but you have a better chance of that extending without taking you out. So your stop goes down here under this green line. And so the momentum traders are like, well, why can't we just buy the breakout? Well, because you only get 10 points from that, and it only happens 30% of the time. If you can buy this, you've already banked, 15 points, and then if you held the runner or re-entered, now you can just do it again, and you got a cushion, right? So now you could see how far you can push that momentum, and then the question is like I said, do you want to sell on the first sign of weakness, on the first failed triangle reversal, or do you want to trail your stop to the next pivot, which is less ideal, or do you just leave your stop where it is, which is what I do, and I just take profits along the way to make sure that when it does stop me out, that it's a very small portion of whatever I put on the trade initially. So like I said, I'll take some here, and then if I do this move again, like if this was 20 points and I get another 20 points, I will try to take another one here if I've got at least. I try to do it in thirds. If I'm trading 2 contracts, you obviously can't do it in thirds, right? But this is why trading 20 micros is actually easier than trading 2 minis. It just costs more. But if you're trading a volatile market that's doing a lot of extensioning and making a lot of extensions, it might make sense to do the 20 micros. Yeah, but it is definitely more expensive, and so you have to be right a lot more often. And see, on ES, I'm just watching this on a different screen, but we came all the way down, went underneath yesterday's low, tried to test back into this food range and rejected it, and then came all the way back up and broke the high of day, which makes sense. Whether or not we extend further than that right away is honestly pretty questionable. It can happen, but what usually happens is this just turns into a balance. Like this whole thing just turns into like a balance zone, this, right? And so we will sweep and consolidate in here as like all of the puts and calls that expire like Friday get burned out. That's what usually happens. But sometimes you do just get the absolutely crazy move up. And there was all sorts of consolidation here. And you can see that if we would have gotten up here right away on this move, we probably would have gotten stuck in this area. But because we have actually moved away from it, approached it, and didn't make it there, what that usually means is that we're actually consolidating inside of this. But what's interesting is that we actually went further than that already. Yeah, here's the low, right? We went further than that, and then further than that again. So that suggests to me we're actually extending the range to the downside. And you can see that we started to extend the range to the upside, but we have not done so since Monday night, right? This is the last time we extended range to the downside. So if this is a range expansion, if we're developing some range expansion here and to both sides, then what you'll usually have after this break is a break up here. But it doesn't have to happen in the same session, right? It can consolidate here, but before breaking this low, it'll break this high. Of course, after breaking this high, it can still come back and break this low. Just because it does get above a high does not mean it's safe to buy. That's totally bullshit. When you have to look at the rest of the market. And if you look here, we're in a consolidation range, right? And so there's very, very often you're going to get a test above and a fail. Maybe 3 of them, right? Like it can do it over and over again before it actually holds and develops volume up here. And because we had all this consolidation here earlier, right? And then if you look at this retest right here, right there, that retest, we can extend, it's this one. We can extend this and because it's going to have a much stronger pull. The other two were tops and bottoms of that consolidation, and that's less likely to hold now. So you could actually just end those once you've exited the area, tried to return, and then went lower. I didn't extend this one, but now I did because, like I said, it was actually a retrace after they developed downward momentum. And so if we were short on that move, your stop, I think I moved that. Your stop will go up here, right? So it makes sense now to bring price back and actually break that as well. So I see liquidity up here to this voodoo range level, and then we could extend the voodoo range levels higher and see more. But it doesn't mean that it has to take it all right now, right? It did already take today's liquidity. It just hasn't taken the week's liquidity. Well, it's only Wednesday. It could still go up tomorrow or tonight, and in the meantime, just like consolidate in here and burn option, like premium, right? It could also continue to go down still, but I think that is a harder direction to go now. The path of least resistance appears to be higher, and especially that's confirmed when we test below this low and fail to go lower, right? That if you were going to trade FOMC, this was your spot to do it. I think Froggy caught it. But I don't think any of the people in Simon's room, other than maybe Simon, were trading right after the numbers. We just don't usually F around with that. But yeah, that would be an okay long. But like I said, I really do think this is where we're headed. And that is 39.35. So like 100 points higher than our low today. Pretty cool. On ES, right? Not on NQ. On NQ, it's far more than that. On NQ, we have a similar situation. But you can see that we came down to approach this, like almost fill up this voodoo range. Almost hit this level, found buyers there, and put an excess down there. See that? And so if you can't see it, go to a higher time frame, like an hourly chart, and it's pretty obvious that like this is clearly excess down here. When you get this kind of excess below all these lows, you're almost always going to at least come back to the volume point of control of this whole area. So a really easy way to take advantage of something like this is figure out when the range started, which was here. I'm not going to cut the breakdown, and then go to where here's the death, right? The failure to go lower. So we take all of this, including that one, and you see that the volume profile looks like this with all of the volume situated at the lows, right? So a very easy trade if it wasn't FOMC and you see this. I mean, even if it is FOMC, it's just fast, right? And like kind of bonkers. But if you can catch it, the trade setup is to long in this area, maybe with options instead of futures, so you can have a bigger stop and just put your stop down here. But then your target is actually to bring it back into this high volume area, right here, and it just becomes a day trade. That part of it is very high odds. Whether or not you break this or not is like probably lower than 50-50, but it definitely happens. And then, like I said, since we've already broken this, the expectation that we're just going to keep going straight up it's asking a lot of the market, right? Doesn't mean it's not going to happen, but it's asking a lot of the market. What makes more sense to me is returning to this volume area, right? So and notice that this volume area high, it lines up perfectly with this voodoo range level at 12.23. So I would not be shocked to see us need to bounce off of this, maybe like right now, right? That would make a lot of sense to me. Doesn't mean it's going to happen, but if you want to know like what I think it's trying to do, I think that's what it's trying to do. It's trying to get us back to this level. Will they pull it off? I don't know. But we can watch this and see that bears are definitely trying to take control of this. That's a valid long if you think it's not bearish. If you think that's mean reversion, that is a long. If it fails, you'd have basically one chance to bring it back up again, and then most likely it's just, but you see how volume is increasing significantly here? It makes this pretty aggressive. What I prefer is actually to put like brackets around it, and look for a trap back into that area from either side. So either getting underneath it and coming back in, or else getting over it and then bouncing out. That's really the only way I could see trading that. But that's just personal preference. People use the algo in all sorts of different ways. I'm gonna exit out of this if I can. All right, we can see we got underneath that level. It's a dashed line here. We got underneath that level now, and we technically retested it here and rejected. So this is starting to look quite a bit more bearish. Trying to retake this level. I don't know if they're going to do it though, but this is a very important spot for bulls to hold on to. So if they're going to go get that liquidity up there eventually, maybe not today, but eventually, it's going to have to recover this here. Which it appears to have succeeded in doing. Not beeping just means that it's above the channel and it's potentially right for, if it's mean reversion, if it's balanced, it's potentially right for a trade. So just ignore that. Unless you're looking for mean reversion, then you wait for a signal and dig it. Right? So it's you hear the dinging and then you see a signal, algo signal, you can get a scalp out of that, targeting usually the midpoint here. But you have to assume that's only if it's not bullish. It needs to be balanced for that to work. Which it very well might be, but it looks pretty bullish at the moment, right? But you don't. always know that. But this was a pretty bullish move. And again, that was one of these traps. If you look, see how we got over this area here. You can, if whenever you see an arrow like this, you do this, and then if you get an algo signal back into that zone, going in the same direction as this one, it's usually a pretty good play. So here's another one on the other side, right? So you have, you usually go to like the next bar. So that is the zone that we want to see who controls. So if buyers control it, what's going to happen is either they're going to swing down here and then pop it up, or they're going to go above it and then bounce off of it. So you kind of have to decide. It's not just which direction the market goes, it's which side has the control. And that is sometimes debatable, but right now I think it's pretty clear that bulls appear to have control. Right? Okay, they've put in another arrow, so now we'd have to move these. So that trade's already done. Once you see that next arrow, you know that that scalp is finished, because now they're setting up another one. So you'd want, as soon as you got that arrow, you'd want to just go ahead and exit that little scalp. Right? These are very fast trades because you're trading with momentum and you're not getting in on the swing. Right? So, I mean, you might, but probably not. And so it's I guess the swing itself is like down here. So if you're gonna take shots on these little bits, you got to be careful. Okay, so now we're trying to establish volume below it. See that? So if you're bearish, what you want to see is see them come up here and then signal down with the algos like an orange bar. Now they did get an orange bar here, but that's not usually. Again, it's aggressive, right? To just take it, but sometimes you will get those moves. You can see that here you might have stopped out, and this one would have paid you. So it's not wrong to do it that way. You just take more stops, but you end up making it up along the way. But I think these are both technically valid if you're an aggressive trader, right? But for these exact same reasons, and it's pretty tough to take this one and not take this one. The only thing that could make you do that is to see that you had a ton of volume at the top that was then potentially trapped when all this volume came in here. So, and then whereas this one didn't have that exponential increase in volume. So, this one looked more like capitulation than this. This looked like shorts covering. And maybe FOMO traders chasing. If you watch these indicators in the bottom, I don't talk about them a lot because I have most of the signals programmed into the colors and stuff, so I don't need to be watching them very closely. But something to think about is that when all of these lines and all of the areas and bars are all doing the same thing, that move is usually with momentum. So like, and then when you get just one line doing something like this, when all the rest are clearly stuck on the other side, these are pullbacks. So like this is not to be shorted, right? You do not short this because it's just this super fast time frame pulling back, and all the rest of the time frames are like, nope, we're super bullish. Whereas if you want to short, you short this when everything's falling, right? And then that might, this one doesn't look that bad either. It looks like they all fell together. So again, I don't think you could get out of taking that one, but you would definitely not short this one. But here, this one, you already got green on the bottom, and these both are falling. So this one's better, right? So there are ways to interpret these. I just don't talk about it very much because it's, first of all, it's still I'm still developing it. But I've colored some of these things and put some of the algos of my own in to signal to me when some of those rare situations occur. So wait for the fighter jet of the buyer first base. They are loud. Very loud. back to the candlestick chart just to show you that we've had some change in character. See how now we've gotten back into the volume area of this this consolidation? That is not what you want to see if you're bullish. You want to see this level, this 11,979.25. You need to see that hold. And so with only 40 minutes left in the day, it looks to me like bears are going to try to take this voodoo range level. So if I was trading, I usually don't trade that late in the day, but I would. This would be your first sign that things are not looking very bullish, right? The only way to beat this now is to get over this guy or to get a signal down here at the next one. But we've already gone 44.25 points just off of this one, you know. So okay, there's another one. So here's an opportunity. If it prints, it's got to get bullish here and then trap back in. It could happen. Well, and now you can see that conditions are no longer met for that indicator. Oh, no, here we go. See, it's not closed yet, so we don't know. It's going to look like it's disappearing, but it's just, it's not repainting. It just hasn't painted yet. It's alerting me that it'll happen if it closes up here. But there we go. Okay, so you could buy this one is like better than this one, but it's still bearish, right? Okay, so they trap back in, or sorry, they trap underneath. So the blue arrow is telling us that if they trap back in, oh wow, they get potentially another one. So if this one's bullish, and it's a star or it's green, it's the better entry than we've had all along this time. Because these blue ones, you want to get traps off of them, or like I said, pivots back to them after going higher. If it just goes lower here, then there's just nothing to do. Yeah. So they're just crushing it. That's fine. Well, they're trying again. Now we did get the POC on one bar underneath this. There we go. So that is technically a valid entry, but this bar here makes it really hard to hold this low because we've gotten the POC, the point of control of the bars, below this previous. Oh, you know what? We didn't get a power bar on this. This is not an entry. It looked like it was going to set up, but like I said, this is a good example of where you got to trust the algo. And in this case, there's no little purple, what's it called, flag there, like there is here. There's no purple flag. And it should show up after 3 bars. So it should have been there, and it wasn't. And so now, well, that's another trap. So this one, but again, no power bar here. So not very high odds. Aggressive to buy this, and like I said, this is actually not really a great entry because we know it's not going to form. Here it still could form, we just don't know. There needs to be 3, but yeah, this one looks like it's going to work. So that's a trap of the previous one, right? So if you had a 15-point stop on this one, you're okay, as well as this one. So any 3 of these will work, but in reality, this one's less good because you have this bar close below and there's no power bar. It did end up working. This one is better, and that becomes the power bar, but it comes right after this one, so you wouldn't know if there's a power bar here or not. And then this one is, if you didn't take this one, you really have to take this one. Because if you were like, it looks too bearish, well, if they go down and take you up by 1 point or whatever, and then go again, like you got it. With these arrows, you have to take that. You must take this if you took the first one. And again, the target is basically 10 to 20 points. So ideally above the red line, but I'm not really targeting anywhere above the blue line. If it goes higher than that, I might hold a runner, but here I usually wouldn't. It's not that bullish on the actual chart, right? Which we talked about. Doesn't mean it can't return to being bullish, but it's lost this important level. So I'm assuming this is just a retrace before a pretty substantial drop. That is actually a sell signal. Not placed in the right spot, but if it's bearish enough, that works. So you'd short here with your target, with your stop right here, and your target would have to be this low, this green line. The problem is you'd prefer to get short up here, so you have better risk reward. But you get what you get. And it's the end of the day, right? I rarely ever trade the last 30 minutes, and it's the last 35 minutes right now. So and the reason I don't is because there's lots of bullshit around that time. And the participants suddenly flip to being the longer term traders, trade the end of the day, and all of us scalpers are generally finished earlier. So you are trading. It's fine to trade against the longer term traders, but you got to realize that like they're gonna defend their position. So your strategy might change based on who your opponent is. All right, so there's another one. So let's see if we can trap that one. Again, what you really want here is to get underneath him and then come back. Wow, they're active today. Again, sorry for the fighter planes, you guys. I'm right next to the Air Force Base. They usually fly like 2 a day. And that's like the 3rd one we've heard, so they must be doing some exercises. I'm glad they're up there, not me. Let's just say it that way. So here we had an interesting signal. We had the blue one and then immediately followed by the yellow one, right? So this one was looking for a drop to go bullish, but I had mentioned this level is not. The problem really is that this level has already been kind of taken by the level above. Whoops, has already been taken by bears. So we didn't expect this to work. And then when we get the exact opposite signal to go in the other direction, that's actually a pretty good scalp. Again, I'm not going to do it at the end of the day when I'm had a fairly good day. But yeah, if I was like jonesing for a momentum trade, that blue arrow and then a bearish candle and then a yellow arrow basically says bulls just got trapped, and we're trying to trap bears, but they, instead of trapping bears, they actually got trapped. That's what happened. I have not back tested that signal. It's a new idea of my own. Nothing to do with Simon. It's just kind of using the structure of the algo and then applying some of my own ideas so that I can get visual signals of things that I personally think might move the market. But again, it's in a similar fashion, just looking for more of a momentum move. Yeah, and that turned out to be a pretty good trade that I didn't take. But like I said, this is outside of my wheelhouse. We're into the end of the day on Fed day. It's fun to say, oh, we could probably see it go lower here, but am I actually gonna risk giving back a relatively strong day on like a new signal that I don't have back testing on? No, but I am definitely gonna, now that I see it work again, I'm gonna start looking for it a little bit more, and eventually I will back test it and decide if that's something. I just don't know how often it happens, but yeah, these arrows are not immediate buy or sell signals normally, but this is the one situation where the yellow one can be a sell, is because you just trapped this blue one, which, like I said, was setting a trap for sellers, and instead they just like fell into the seller's trap. So that becomes a momentum entry. There are a couple other signals like that. The diamonds can do the exact same thing. So now that we have all this volume down here, and see how volume's getting bigger every single down wave, we are no longer looking to this would be knife catching to buy this, even if the algo signals that it's a high odds trade, that there's aggression, I should say, is what the algo's looking at the footprint and the DOM and the time and sales and saying, is there aggression or not? And purple or pink is a lack of aggression, whereas all of the stars and the diamonds and every other signal is a sign of aggression. So what you want for a trade, if it was mean reversion, is a sign of weakness followed by a sign of aggression in the opposite direction. This instead had a sign of weakness to the bear side and then a sign of aggression to the bear side. So what does that mean? Well, this guy is potentially vulnerable to being trapped if buyers can buy it up here, can get it up here. So this guy could get trapped here, but this is basically a sign that the sellers are trying to increase the momentum after buyers started pulling orders from the order book, which we've all seen if you watch the DOM. Like that's the whole idea of this algo, is that I'm taking ideas that are we're taking like order flow concepts and structural concepts that you might not see in a visual representation, and giving it almost like gamifying it to give it like a yes or a no right there, so that I don't have to stare at this and be like, oh, is he trapped, or what, like I don't have to look at the numbers and stuff like that. Like I can just say, is it purple, is there a star? Yes, okay, trade. Right? Like eventually you don't even care what these mean, it's just a matter of learning the patterns. The purple in the background though says do not buy, and that's something I've added because I have a bad habit of fading these moves. Wow, another one. I wonder if it's just the same plane just like hovering over. Interesting. But the further we get from this channel here, this channel is based on ATR, so the further we get from that, the more likely you can fade it back to the channel. But whether or not it takes one try or two, oh, there we go. So look, they're trying to trap shorts. That's what that arrow means. And the shorts had weak momentum here. So if you want a knife catch and it closes up here, it would make sense. But you'd have to actually get the signal when it closes. It looks like the bulls aren't even going to succeed in closing a signal candle. Okay, here we go. Maybe they'll do it here. Oh, but now we don't have the purple next to us, so it's not as good. We have to now get over this with a close. And it, like I say, it's still literally knife catching here. The momentum trade definitely would have worked, but it's not something I take consistently. So yeah, look at that. They are trying to trap sellers, and sellers just keep selling. That is not a good sign for bulls. Not a good sign at all. What it looks like to me is that a lot of people expected this to go higher, and when it did, those who were already long took some profits, which kind of makes sense. Whether or not we'll come back up and break through the highs again, I have no idea, right? But for the time being, it certainly makes sense that we would return back through this value area after taking the liquidity up here and rejecting. Makes sense. Easy to guess what's going to happen beforehand? No, but after it happens, it's pretty sensible. Oh, here we go. So now they're trying to trap these guys. We have to get a close above this. And again, the target would just be back to this line. Technically, we would need an algo signal to fire above this. So a green candle or a star, preferably, or a diamond would work too. But it's got to break above this though. And we can already see that this even if it closes bullish, this bar will not be above this. So even if there we go. So that is an algo signal, and there they follow it through. So that is potentially a scalp to the long side, but your target is right here, and you'd be out. See that? It hit the line, and I'd just be out. Boom. Can it go here? Yeah. But this is the high odds piece of that move. A lot of the time, it's going to reverse now. Sometimes it goes to the mid, and even fewer times it goes to the high. But it's the further away you get from these bands, the harder they have to push to get it to go lower right away. And so as soon as you get some sort of weakness, they can get trapped. And that's what this arrow says. So I guess when you get it signaled all the way at the low, maybe it makes sense to just take the trade here, like early, and then have like a really small stop. And that way you can size really big, right? Now this might be one of the times when they just rock it. It is the end of the day. It's not super surprising that we get more illiquidity. But like I said, the way I trade that, I am a layup trader, right? I want consistent, day in, day out, easy to process, low stress trades most of the time. If I catch an extension, cool, right? If I catch a momentum trade, great. But I want my system to work so that if I just catch this, from here to here, and I do that 2 or 3 times a day, that I have a good day. Because I've found that this is way easier to predict than this. And as much as we all want to say that we would just hold this, the truth is they rarely make it this easy. They usually try to trap you. Hey, Venom. Thanks for saying hello. Like I said, if you guys are new to the algo, I know it's a lot of visual. In the room, Simon uses this, which is a lot easier to read. And I worked on this for a year and then started adding my own ideas. So that's all this is. It is just Simon's algo with a couple colors and things changed, and then some of my own signals that help me not make mistakes. But if you don't know what you're looking at, it just looks like a bowl of Fruit Loops in a bowl of spaghetti. And that's fine, right? It would obviously take, like, learning a system like this, you don't learn it like this. You start with like 2 signals and you learn those, and then you build on that as you become more confident until eventually you can build as many as you want. So if you want to trade with the algo, the way you would have to do it is you would have to be in the trade and perform room to get access to Simon's algo, because my algo, it's based off of his. So my studies are referring to his studies, which are password protected. And you need like the files associated with it. So you can join the trade and perform room and see his screen, or and then if you are a premium member, you can get this put on your desktop. If you have this on your desktop and you want any of my signals, message me in the Slack channel, in our Slack channel in the room, and I'll help you build the signals that you want from here. You don't have to have all of them, but they're not going to work if you don't have the core system, because all of my signals are referring to these signals, if that makes sense. And yeah, it is on Sierra Chart, so you do also need a active Sierra Chart package or whatever. You can see Simon's charts without Sierra Chart, but if you want it on your desktop and you want to start building your own algo like this, like I've done over the last year, you will need Sierra Charts. And if you're trading futures, you need it anyway. If you're going to make money trading futures, you're going to need Sierra Charts. Okay, so we did get a pretty nice extension up to the target. This is like the highest target range is between the red and the blue. On Simon's, the colors are yellow and orange. So he is targeting this yellow to orange zone. He sees this as the lower zone and an upper zone. I see it as quartiles, which is why I've added the middle. It's just a different way of looking at the exact same thing. But yeah, the actual, if you look, like if I open these studies, what you'll see is that it's password protected, and I don't have even if I wanted to, which it wouldn't be respectful of my coach after teaching me everything. I wouldn't be able to help you build his algo, and without his, mine won't work. So because it's basically just his with like add-ons, right? But you can get a free pass to the room though if you want to go check it out. Let me know. Sure. Yeah, let me put it in here. So hold on real quick. Okay, hold on. Wow, they really stuffed him. Okay, so what you want to do, how do I sign into this chat again? I think I have it on this window. Too many damn screens. Here we go. All right, so what you can do to get more info about the room is it is trade and perform at gmail.com. That is Simon's email. So if you email Simon, tell Simon been offered I think he'll probably extend it to 5 days if you mention me. So just a 5-day free pass to see the trading room. And you can just get a feel for it without having to make any commitment. And you'll see his charts, which, like I said, look like this. And you'll hear how he manages this and how basically he only needs like 3 symbols to take trades all day, which is awesome, right? And as you get better, you'll be able to decide if you want just 3 signals or you want 1 signal, or if you're like me and you just can't get enough of more and more and more, then yeah, like you can try developing your own. But a lot of these I'm not actually using for trade entries. I'm using as filters for trade entries. So it's not so much a way to get more trades. It's actually a way to remind me not to take trades. So like Simon might know just by looking at this that this star is not as good as earlier one, right? Like this one, right? He may just kind of see that, and you might too. But like when it's moving fast, I don't want to have to think about the structure and stuff and the momentum. I just want to look at it and say, is it pink? Is it purple? Is it black? You know, if it's black, I can probably scalp it back to the channel. Then I just have to ask, do I have risk reward? So like here, it's a valid entry, but the target is back into here. So it's like almost 1-to-1. It might be good enough, but the exact same signal in, I guess this one was a green line, or green one, but let me find one here. So like this one, you can see failed, right? So, and it's exactly the same. It was pink, and then it's not pink, and there's a star. It's the same signal, but like there, you need, in my opinion, you either need to have filters for ways to know which ones you're going to take and which ones you're not, or you just need to be aggressive enough that you're willing to take all of them, and then learn that way what it looks like when they work the best. And some people don't need the color coding, right? They just can look at it and be like, that's way too bearish, I'm not touching this. And that's cool. You know, if you're good at like reading a Renko chart, you're not gonna need anything more than this. You're just gonna immediately see that like the only thing I want to do here is try to get here because it's way too bearish, right? But for me, sometimes I will see the star and just, like I said, I trained my brain to take longs on white stars or whatever, so I would just hit buy and not even like think about the conditions. So, and I would see no difference between this star and this star. And I wouldn't realize that like this one actually has more opportunity than this one does because it didn't get underneath this one. And so, like I said, on Simon's, you can learn to figure that out and just see it, or I can add filters that basically say if the purple just went away and I'm underneath the radar, I can take this back to the lower level. But this one, I can't do that. There's no trade here because it's bearish. They're not trapped. These guys are not trapped, and we are on the channel, not below it. Now, if it gets underneath this and comes back and triggers again, then I could take it. And so learning those rules, it's going to all depend on what your aggression level is and how well you can handle losses versus missing trades. Some of us have a much harder time taking stops, whereas others of us take stops like a champ. But if they see a trade go without them that they should have been in, they'll tilt, right? And so you got to adjust like your dials down so that or up so that you're not setting yourself up to tilt. Because, like, for me, if I took this, if these were reversed and I took this long and failed, I probably wouldn't have taken this follow-up one and gotten my money back. You know, it's nice when the better one comes first, but that's not always how it works. And so just having that extra, like, note that, hey, it's really bearish because it's purple, but we might have this guy trapped for a scalp, is, it just helps me stay confident with what I'm supposed to do. Let's just put it that way. But, you know, if I had to, could I trade with just these 3 or 4 signals? Absolutely. And I do just fine. I would just take a few more stops and probably miss a few more trades. Here, I'll pull up if you're curious, let me pull up my results for today. When I evaluate my results, I don't just look at what the P&L is. I need to look at whether or not I stayed with my process, if I followed my plan and I took trades that were outside of the system or within the system. And then did I take too many trades? Did I not take enough trades, right? So today, I trade on multiple different Apex accounts, but today I hit my goal on one of them with a 66.6% win rate, which is pretty average for me. And then took 2 more trades with micros in a smaller account that's not yet built up, just to kind of keep it safe. And those 2 trades were both winners, and so I was done for my day. Because keeping 100% win rate is pretty much impossible. And it was coming up to Fed time, and I was like, you know what, I've got to win here on Fed day. It's a good day. But and if you didn't see the trade, you know, it's only 6 trades, right? 4 winners, 2 losers. So it's not like, my style is not like buy every star, right? Like if you're watching this and you're just like, I'm just gonna buy every white star and sell every pink star. I'm not saying you won't come out ahead, but you're not gonna have 6 trades. You're gonna have like 60 trades, right? Especially if you're trading long and short. And for me, that's too much stress, and like the fees just don't cover the mistakes I make when I'm overactive. So for me, all I had to do is just add some more signals, and that kind of reminds me that, like, I'm not a knife catcher, I'm not a momentum trader. And yeah, if I just stick to these few trade setups, even if they only happen 2 or 3 times a day, I'm gonna most of the time make money. And I care about that way more than like catching the big trade or I don't know, any other metric. Even P&L, honestly. I care about being consistent and having a system that I can apply to almost any environment and make something. There's certainly environments where it trades better than others. But yeah, the way I look at it, if I'm paying to have access to the system and I'm spending all this time learning it, I should figure out what the edge is here and just exploit that. Rather than like say, well, hey, you know, there's obviously an aggressive trader here, so I should be long too. Like, no, I don't see it that way. I see it as, okay, we know an aggressive trader is here. Can we turn that into an edge? Can we have a pattern that we can see that can turn that into an edge? And how far does that edge usually take us, right? What does it usually pay? And so, for instance, if you're reversing here and trying to get longs, if you're fading, my target is literally this blue line. And so this one failed. This one made it. This one, there wasn't a trade because it's on the blue line, right? So until we get under a low and then come back with a signal, I don't even expect to get here. And so it's either don't trade because I don't have risk reward, or trade and get immediately out with a small scalp. Other than that, I would only be looking for shorts if there was momentum. Here, there's clearly no momentum now. See how it's like we're getting signals to both directions. But notice here, the sellers got aggressive here. So what we can do is we can mark off this area and we can say we can go like this. This is an aggressive sign too. So if buyers can get above this, oh, there we go. See how it got below this low? and then came back above it. So this can be a nice scalp. So that this, now you can target this quartile, right? So I didn't see it fast enough to mention it, but it got below this low. It didn't quite beat this low, which I don't love. I'd prefer we break that one, but don't always get perfect, right? But it broke a low with on a bar that had signals indicating that there were aggressive traders. Basically, they got stopped out, and then some other trader bailed them out. And I know I have this aggressive seller right here. These two guys trying to short the lows. All we have to do is put a little pressure on them, and we can at least get into the top quartile, which is above this red line. You haven't quite hit it yet, but usually it's going to get there. It is the end of the day, right? Last 10 minutes of the day, it certainly could just straight up fail. And it does not work 100% of the time. And Simon's very open about that. You must manage risk because sometimes it just doesn't work. There we go. This is, if I was in this trade, I'd have to remind myself that I know that the backtest says that my best place to exit is the red line, and it often goes higher than that. So don't sweat it. The system works, and then I get filled, right? And now what's hard about this is you have to decide the hard. It's not that hard to figure out these patterns. Does it take time? Yes, right. The hard part is deciding, okay, now that I know I want to buy that, do I want to get all out here or do I want to hold runners? That's what's tough. Oh, cool. I'm glad you appreciate it. It's like I said, I've been trading for almost 8 years and have not until I had a system like this one in particular, but a objective system that has, this is where you trade, this is where you exit, this is your target, just trade the system. Before that, I was a boom bust trader. I would do great sometimes, and then I'd do really bad sometimes, and I would try to fix it, but I didn't even know what to do, right? With this system, I know what to do, and my consistency has like skyrocketed. I'm not risking a ton. Like I showed my results earlier. Like my good days are like $800 days. Like that's that. But I have another job. Like this is for me. It's a side hustle. I'm not risking a ton, but I'm looking for a consistent way to grow my account so that, because I would much rather have trade setups that I can trust. If I can trade them well and not make a lot of errors, if I can do that with 2 contracts, I should be able to do that with 4. Whereas if you're already trading like huge amounts of contracts, but you're trying to like see if you can hold the trade longer, or maybe I need to, tweak this or that system, right? That's a lot more work than just figure out a trade setup that works all the time, like really often, and then increase your size once you get good at it. Like imagine if in basketball, if you had a choice how much your layup could how many points your layup was, but every time you missed a layup, you had to pay that much back, right? Or like, let's just say shot, right? Not even layup. Let's just say shot. Like the game is, you get to choose how much the basket is worth before you take the shot, but if you miss, you have to pay. You lose that many points. I don't think anybody's going to take three throws, right? I mean, why? Why would they do that? They would just take the layups and risk as much as they're comfortable risking. So that's how I look at trading is, if they happen to stumble onto a big trade, cool, right? That's how I feel too. If I hold some runners and it works out to a huge advantage, that's great. But I don't personally get those trades every day. I can't rely on 150 point NQ trades, right? I might equal 150 points over the day, but it's going to be by getting 10 points here and 15 points there and 20 points there, and then suddenly I get a big rip with runners and actually get 50 points, and then I get 4 more 10-point scalps and I'm done, right? And suddenly it's just like you caught that huge move, but the difference is that the guy who waits and fires over and over again for that big move probably spent 40, 50, 60 points in stops trying to hit that move, trying to hit that trade. Whereas with these mean reversion trades, I'm getting, I mean, I show you, it's like a 60% win rate, and that's pretty normal. That's not out of the ordinary. And there are people in the room doing way better than me. So keep that in mind. I'm one of the guys who has time and interest in even talking about this stuff. Most of the people in the room literally come in, they learn it, they keep it to themselves, and they just put their nose to the grindstone and like size up and you know, the ones who do well, that's what they do. So I actually don't recommend anybody replicate my pattern, which is, you know, learn on your own, get some help to learn something, then decide to take that and expand it into something else, then teach that for a while, and then go back and learn the right. Just pick something and learn it and get really good at it. It's hard to do that for me anyway. That's been difficult. But the ones who do well are the specialists, the ones who are really good at identifying the trades that they take, and they just practice taking those day in and day out until they can trade it bigger. And like I said, I don't think that's just with this system. I think that's the case for any system. You very rarely do you see like star traders that are like jack of all trades. Usually they have a specialty. And I bet if you promise not to share it, right, that specialist could also like dictate exactly what that best entry looked like, and would be able to say, yes, that's one, no, that's not one, yes, that's one, right? Just like with this system, where I can say, like, this is an okay entry, this is a slightly better entry, and then to the short side, this is an okay entry, this is a slightly better entry. Like, I can see it. And I can't argue with, like, a star. I can't be like, it's kind of a star, but it's sort of not. Like, no. Whereas if I'm trading off of the, like if I'm trading off of this, right? Oops. If I'm trading off of this, like you can argue with yourself all day about whether or not you're bullish there or bearish there. It's like, oh, there's somebody buying. That's really all you got, right? And even with the footprint, even with like a delta footprint or whatever, like you can definitely see the areas very clearly that are areas of like importance. But do I short the first test of it? Do I short the second test? Right? Like I don't know. You got to make up your mind, and you gotta have a way to do it that so you can repeat it over and over again, and trust that it's going to have like similar results. Otherwise, you're never going to have confidence to size up, and that's just the truth. And like I said, and if you do size up, you will boom and bust like I did, because I was pretty good at sizing up. What I wasn't good at is getting things consistent. So as soon as I thought I finally found something that worked, I'd put all the size into it and like basically gamble on it because I didn't have clear. Not only did I not really backtest it like objectively, but I couldn't even say like this is a trade, this isn't a trade. It was just, I know what a bull market looks like. I know what what this chart pattern looks like, or I know what this order flow shift looks like. It wasn't, I need to see X, Y, and Z happen, followed by A, B, and C happen. It was just, I know how to trade. And like I said, I did fine for a while like that. That's the scary thing. I wasn't trading futures, though. Once I took on futures, it was all downhill from there until I got the system. Because trying to trade futures with like anything this leveraged without an objective process is like a death sentence for your account. Now, once you have a system that you trust and worked and you traded it in sim and stuff like that, there's no better place than futures to take advantage of that edge. But traders without edges trading futures are not doing themselves any favors. That leverage will not help you if you don't have an edge. And I'm not saying you don't, I'm just saying I didn't. And I was trading futures and I was sometimes winning, but I did not have an established edge that I could just apply to the market on a daily basis. And even if you have one, learning how to execute it is also tricky. It does take time. So the close looks like we're going to get a nice bearish close. So we stole all this liquidity up here and flushed all the way through that swing low. Now if we back out, which means I lost a bet, by the way. I don't know if Daniel's in here, but good job, dude. we had a bet of whether or not we both said that we thought that we'd probably get a pop at the beginning, which was funny because it was actually a drop first. But I had said I thought the pop would probably end up resolving higher, and he's like, nope, it's gonna pop and then resolve lower. So, like I said, am I the smartest person and the best trader in my room? Absolutely not. And that just goes to show. But yeah, if we look at the higher time frame, I was gonna do. I guess it's easier to see it on the day. So all the lines of the voodoo range levels are just my own system for identifying location. So we're clearly underneath this volume build, so we're going to get rid of that. Don't need that on there. And now we go back into some of these previous levels. And I mean, whoops, I hit the wrong button. If you look at it, you want to do this one. So if you look at it, actually here, let me show you. Let's shift these down. So we'll shift the voodoo range levels down a bit. And we'll see if we have any, like here. So here and here, those have clearly, this one is in particular interesting, where we touched it, we tested below it and failed to hold it. And then they came back and couldn't reach it, and we went up. So if I had to just look at this and guess where we're probably going without doing anything at all, I would say, well, this one makes sense. Now, if you don't trust the voodoo range, which is fine, what you'd want to do is figure out where the volume was. So you could either just put a volume profile on, or what I like to do is I'll take the volume to the low and then the volume to the high of the consolidation, right there. That's a little bit skewed because it's a day time frame, but so now what we get is, oh, whoops. We have a volume build around here, and then this volume build is right on this voodoo range level. Okay. So now if we go back to the intraday, we head back there. I guess I could have done this on like a 30-minute. Okay. Is that it? No. Right there. We could adjust this further. The hard part here is that we're working on the December contract and there's not a lot of volume here. So trusting a volume-based targeting system on this contract is probably not a great idea. But what I would normally do is I'd find those volume points of control on those two waves and then basically say, I don't want to be a buyer if bulls can't hold above this, right? So I'm not going to knife catch down here, definitely. And the only way I'd ever buy this is if we tested one of these and then bounced and we held below it, probably on a retest. That's what I really want if I want to be a buyer. If I want to be a seller, all I have to see is sellers showing momentum in this area, and or this area. And the further I get down, the more nimble I have to be. Like, so for instance, if I'm trading, so if I'm selling a rejection here, right? We fall down, they get here, they reject. My next target has to be here. It can't be like the low of the year. It has to be the volume build, probably like a little higher than that, like this voodoo range level, 11,361 would be my target, right? So that, but then if they took that and established volume below it and retested it, guess what? I could short it again, right? But I think what a lot of people do is they're like, this looks bearish, and then they look at a high time frame and they're like, well, I want to get here. And then so I'll sell ES, you know, or whatever, or sell NQ futures, and that'll be my target. It's like, no, that's it doesn't. You're not just gonna get a straight down move to the low. I mean, sometimes you do, but that's not usually how it works. Usually, what you're gonna get is a test of this one, a bounce, a test of this one, a bounce, maybe a little bit higher, and then go through it, and then retest, and then go down, right? So you're going to get some sideways action in here most of the time, especially inside of the value area. So this is the move down, right? And this is the consolidation at the low. Oh shit, did I do this wrong? Is there another low down? No, it's right here. Okay, so the low, consolidation to the low. I don't know if I did this right. I think I did it right on the daily, but it's a little different on this time frame. Let me do it on this time frame. So here, let's just redo it. So we're gonna do we're gonna measure to the low, and then we're gonna measure off the low. And again, is this perfect? No, because it's December contract, and this is the first major pullback, so we'll see that. All right, so now we have two value areas and two POCs, right? One down here and one here. Now this one doesn't align with the Buddha range level, but you can see it. They did bounce off of it, right? Let's see if we go down just a little bit more. If the other one might light up. Let's see. No, but it did interact with this. So then what we can do is we can take the volume area of all of that, right? The low to the high. So if, and then we can extend that. If we get stuck in here in the near future, expect chop and balance. That is a long way down, right? And it's a big area. Like we could spend days down there is what I'm saying. Days. But I think the most important thing is even though there are targets down here, we don't just short breakdowns to hit targets. This isn't a penny stock. There is liquidity in NQ and ES, so usually. Not always, but usually. So if we start bouncing off of one of these like this, it's probably going to come back up here and at least spend some time in this last voodoo range, consolidate, before making a decision whether or not it wants to test this one or go through it. And like I said, the best places for trades now are going to be after we establish above them and then pull back in and we can't get under them. If you want to buy, you'd really want to see us get back above this 11.8, 24.50. Like this is like kind of a not great place to buy, in my opinion. As long as there's momentum in the market, you are risking getting trapped if you're going to buy like as they rise here. But once they establish some volume up there and they pull back and hold, now all of a sudden it's okay. Anybody have any questions? Otherwise, I don't have a whole lot else unless you want to. If you guys want to see what it looked like earlier, or if you want to see more Simon's algo, I can show you that. Here, we can do a quick glance at what the day looked like on Simon's. But if someone has any questions, let me know. Otherwise, I will start wrapping this up. Oh, hold on, I got it. Nope, we're good. All right. Wednesday. That's right. So a lot of action here. Let's see. Is this 40 tick? NQ? Yeah. So I can just. All right. We're gonna erase all the lines because they're old. Nothing wrong with being old, but for lines, you generally want the newest ones. Old ones do sometimes work. His white line here is a moving average that I don't use personally. Not because I don't think it's helpful, but I don't think it's helpful. He uses it in a different way most people do. And I end up getting confused if I see that. So I forget that it's not one of these. Okay, so here's the open. He's on Central Time. I went too far. All right, so from Simon's point of view, on his algo, we ran up into the pre-market. This is 24, right? Yeah, that's what we usually trade on. And then here's the open here. So if we wanted to, we could measure the volume down here, and what we'd probably find is that we come back into the volume build here. I won't do it right now, but that kind of bounce. But you can see that our primary trade, this isn't one, but our primary trades would be doing that and this, and then either this or this, right? Those are what our trades look like. Then it's just a question of, is it triggered or not? And so with the fewer signals, what we're basically, oh, you know what? But I don't have the red and orange on here. So this one is likely orange on mine. I'm sorry, green on mine, and this one is likely green on mine. So those are entries. I just don't have the updated one. Yeah, see. Oh wait. What time is that? 8:44. I'd have to get Simon to add them in for me, but I don't have them marked right now because I was changing things. So, but I'll show you. And like I said, on Simon's newest version, he does have it marked. It's just not the same markings as mine. So see this one. Oh wait, no, that's not it. Wednesday, further back, it should be just green with no star. 8:30. Yeah. So this, right? Those are valid. And I think there's another one right here. Right? Those are valid here, and they're green on mine. On his, I just don't have it turned on properly. But this did trigger. I can see that it did trigger. This one did not. That one did. Don't think that one did. Okay, so here's a star. Brings you back into the. You'd be close, but you'd hit it. Right. So that's what the trades look like. The better ones break highs and lows like this, and then come back with the stars. So that is when you'd hold runners with, because it's a trap. In other words, we trapped these guys long, and we can flush them to their wherever. So if their stops were here, right, we are looking to get out of the trade fully once those stops are hit. And I don't care about this, right? Unless we're going to go back to balancing, then that's cool. But I am not shorting this. It's not in the right spot. It needs to be up here if I'm going to do that. Might have gotten caught shorting that, right? And maybe. This one here is actually a buy, but I don't have that turned on. That one is too. See that? Purple bar, triangle down, followed by star is a buy. And that one ripped. You know, so I mean, you could be done with the day right there, right? Like, that's pretty good. You'd have one stop and one, this is not a trade, two good trades, and then 1, 2, 3, yeah, this is 1, 2, 4, 5. I'd definitely be done. Right? I took 6, and so I didn't take all of these, but yeah, all you really need is, again, my targets would be, I'd be out of most of my trade here, and then the rest of my stuff is getting out right there most of the time. So I am okay missing this, but you can see that there's no sell signal. So if you want to hold a runner, you can. I'm just only trading 2 contracts right now. So I have to make some difficult decisions. The more contracts you're trading, or if I traded micros, I could easily catch this. But what I've been doing now is trade one micro to the primary target, second micro to stop out any liquidity, just get out of the trade, be happy with a win, right? And then wait for the next one. Like, this is actually a sell right here. Here, I'll show you mine, so you know I'm not talking on my ass. 1 o'clock. Oops, it'll be orange. You can see I was actually trading and drawing stuff here, right there. That is a short. Pink bar, orange bar, outside. See how it's above the blue line? This is a big enough one where you could take this all the way down to here, right there. So I'm out of most of my trade here, in that case. And then if there are stops over here, right there, the last runner I would ever hold would be here at 60. If it gets to 60, I'm definitely out. Right there. I'm out of the trade completely right there. No question. And I miss this. And that's fine, right? But I also don't have to trail my stop all the way up here. So that's it. All right, hopefully that's helpful, guys. I'll leave this up for a bit in case people want to watch. But that's how it works.